Welcome to Crypto Daily, where you'll find the latest news and analysis on all things crypto and NFT related. Hit the subscribe button and join our community of crypto enthusiasts. Let's navigate this exciting world of digital currencies together. Welcome to this update on the recent bankruptcy filing of Genesis Crypto Lending Division. Despite the filing, the company's trading arm has been active on blockchains, moving money around as usual. According to blockchain data compiled by Etherscan, a wallet controlled by the Genesis OTC trading desk sent about $125 million of ETH, FTM and USDT to Coinbase, Binance, Bitstamp and Kraken on the day of the bankruptcy filing. This matches the statement by parent company Digital Currency Group that the trading business will continue to operate business as usual. However, experts are skeptical about the long-term effects of the bankruptcy on the spot and derivatives businesses. Charles Story, head of growth at crypto index platform Future, said that the reputation of Genesis is in the bin. A Twitter poll by journalist Frank Caparro also showed that 73.7% of respondents would not trade with Genesis after the bankruptcy. The OTC desk wallet also sent 50,000 ETH to Coinbase, 20,000 ETH to Bitstamp, and 5,000 ETH to Kraken. It sent an additional 7.7 million FTM worth roughly $2.4 million to Binance and $3.9 million USDT to Kraken. Data from Nansen.ai shows that this wallet typically moves funds on weekdays, indicating that the transactions were normal amidst the bankruptcy drama. Genesis on-chain portfolio, composed of at least 8 unique addresses, has a net worth of $307 million as of press time Friday. 74.7% of Genesis portfolio is ETH, while the next 6 tokens, USDC, Comp, Sand, APE, Mana and Aave, make up 13.8% of the entire portfolio. However, this figure is likely a conservative estimate as venture firms often obscure their token holdings. Despite the bankruptcy filing, Genesis trading arm is still moving money around on blockchains, but it remains to be seen how the bankruptcy will affect the spot and derivatives businesses in the long term. On to the next topic, let's talk about the Central African Republic's efforts to adopt cryptocurrencies. A 15-member committee has been established to draft a bill on the use of cryptocurrencies and tokenization in the region. The Central African Republic, CAR, is a developing country in Central Africa, and President Faustin Archange Touadéra believes that cryptocurrencies have the potential to help eradicate the country's financial barriers. He is committed to creating a business-friendly environment supported by a legal framework for cryptocurrency usage. An official press release states that with access to cryptocurrencies, the monetary barriers existing until now will disappear, the main objective of the measures adopted by the government being the development of the national economy. The 15-member committee responsible for drafting the crypto bill comprises experts from 5 different CAR ministries, including the Ministry of Mines and Geology, the Ministry of Waters, Forest, Hunting, and Fishing, and the Ministry of Justice, Promotion of Human Rights and Good Governance. Together, they will work on a legal framework that will allow cryptocurrencies to operate in the Central African Republic and expedite the development of the national economy. This move comes as crypto initiatives from the African continent are gaining momentum. Nigerian crypto exchange Roque recently obtained a virtual currency license for the European Economic Area after 2 years of waiting for permission from regulatory authorities. The CEO of Roque, Benjamin Onamore, said that offshore Africans send back over $5 billion to their relatives, and the current remittance system slows the process. He believes that crypto is a faster and cheaper route that can bridge the gap and help reduce fees in moving money globally. The Central African Republic is taking steps towards a legal framework for crypto adoption, which could help to eradicate financial barriers and support the development of the national economy. It is also a part of a larger trend of crypto initiatives gaining momentum in Africa. Let's dive into the update on Binance's recent announcement regarding potential service disruptions for bank payment transfers. The cryptocurrency exchange has informed its customers that SWIFT bank transfer of US dollar-held accounts may be halted for transactions below $100,000. Binance has informed its retail customer base of a potential service disruption that may halt on- and off-ramp bank payment transfers through the SWIFT payment system for transactions less than $100,000, starting February 1, 2023. The exchange emphasized that this was the decision of their banking partner, Signature Bank, and that it was aimed at decreasing the bank's exposure to the digital asset market. Binance also stated that it is actively seeking a new SWIFT, USD, partner to avoid service disruptions for future bank payment transfers. However, the exchange emphasized that credit and debit card payments will continue to be accepted and that non-USD bank transfers would still be processed through the SWIFT payment system. The exchange also confirmed that the change wouldn't impact its corporate accounts. Binance has suspended transfers in the past, such as temporarily suspending Solana-based USDT and USDC deposits on November 17, and temporarily suspending Ether, ETH, and Wrapped Ether, VETH, deposits and withdrawals for about 10 days ahead of the Ethereum merge. Binance has announced that its retail customers may face service disruptions for bank payment transfers below $100,000 through the SWIFT payment system starting February 1, 2023. The exchange is actively seeking a new SWIFT USD partner to avoid service disruptions for future bank payment transfers. However, credit and debit card payments will continue to be accepted, and non-USD bank transfers will still be processed through the SWIFT payment system. Thanks for watching. As we continue, let's talk about Norway's digital currency project. The country has been working on a central bank digital currency, CBDC, that raises privacy concerns as it seeks to replace cash use. In 2016, Trond Bentestuan, then an executive at major Norwegian bank DNB, proposed to stop using cash as a means of payment in the country. He stated that there is approximately 50 billion kroner in circulation and Norges Bank, the country's central bank, can only account for 40% of its use. That means that 60% of money usage is outside of any control. This sentiment came in parallel with the growing enthusiasm for Bitcoin in Norway, as DNB enabled its customers to buy BTC via its mobile app. Local courts demanded that convicted drug dealers pay their fines in crypto, and local newspapers widely discussed investments in digital assets. Last year, Torbjorn Heggeland outlined the project's goal of replacing cash use in the country. With this background, the decline in cash use and other structural changes in the payment system are key drivers for the project. In September 2022, Norges Bank released the open-source code for the Ethereum-backed digital currency sandbox. The sandbox is designed to offer an interface for interacting with the test network, enabling functions like minting, burning and transferring ERC20 tokens. The experimental phase of the Norwegian CBDC will last until June 2023 and end with recommendations from the central bank on whether the implementation of a prototype is necessary. However, it is important to note that the Norwegian CBDC project raises some privacy concerns, as the goal of any government is to control financial transactions as tightly as possible. Norway is taking a step towards the future of finance, and it will be interesting to see how this project develops and how it will affect the country's economy and privacy. Moving on, let's discuss the recent accumulation of the meme-inspired cryptocurrency, Shiba Inu, SHIB, by the top Ethereum, ETH, whales. According to data from whale surveying platform Whale Stats, the top 1,000 ETH whales have accumulated $422 million worth of SHIB since January 17. This is a significant increase, as just 4 days prior, these same whales had $168 million worth of SHIB in their holdings. This means that in just 4 days, these top ETH whales have increased their holdings of SHIB by a staggering 151%. As a result of this accumulation, SHIB is now the most held digital asset by the top 1,000 ETH whales, excluding ETH itself and stablecoins Tether, USDT, and USD Coin, USDC. At the time of writing, the total SHIB holdings among this investor cohort add up to $584 million. Other digital assets held by these high-net-worth traders include $65 million worth of Oracle provider Chainlink, LINK, $58 million each in decentralized exchange Uniswap, UNI, and deflationary CryptoBit, as well as $55 million worth of interoperable blockchain Quant, QNT. It's worth noting that this whale activity centered around SHIB may have impacted the token's price, as it went from $0.00001045 on Jan 17 to a peak of $0.00001210. SHIB has since continued to rise and is currently changing hands for $0.00001226 at the time of writing. The accumulation of SHIB by these whales comes as the ecosystem gears up for a beta release of Shibarium, a proposed Layer 2 for the Doge rival. The protocol will be a Layer 2 network built on top of Ethereum, similar to Polygon, Matic, Arbitrum, and Optimism, OP. The recent accumulation of SHIB by the top ETH whales highlights the growing interest in this meme-inspired cryptocurrency. As we await the beta release of Shibarium, it will be interesting to see how this development impacts the price and adoption of SHIB in the future. As always, it's important to do your own research and invest responsibly in the cryptocurrency market. Thank you for watching, and we'll see you in our next video.